I actually think that the turmoil in the stock market is attributable to two factors, both the Fed action and the trade war. I mean, and by the way, the trade war may be the most important issue of all here. And that's why for the next couple of months, I think we're going to continue to see this kind of seesawing effect of the stock market as we come to, 60 days now until the Chinese have to come forward with some kind of offer. And the upside is, the reason I'm not a great stock picker, but I will say this. If you believe that Trump can pull this off and then we can get at least a deal to make a deal with China where they make real concessions, because Trump isn't going to agree to anything that doesn't, really open up Chinese markets, stop the stealing of our intellectual property and so on. If that happens, the market's going to go through the roof. I mean, would you guys agree with that?
Yeah, I guess the one caveat, if I can be a downer, is global growth. Brexit could be a disaster. If it turns out that GDP in China isn't 6, it's 2. With that as an appropriate caveat, yes, I agree with you.
Now, on the Fed issue, you're right. Is it a disaster that the Fed funds rate?
Can you say that again, Stephen, so Joe can hear it?
I'm thinking of it different.
I almost never say that, but you are right. No, I'm teasing. Look, it's not a disaster that the Fed funds rate is going up a bit, but it is interesting. If you track the stock market, the big decline, it really began in September, right?
Yes.
And that's when the Fed started raising interest rates. And one of the points I kept making all along, and even now the Wall Street Journal has been making this, is if you do look at commodities, and I'm an old-fashioned guy. I mean, if you look at what Volcker did in the early 80s, the way he conquered inflation was he kept his eye on the commodity prices. And when commodity prices were rising, he raised interest rates. And when commodity prices started to fall or stabilize, he stopped. And what we've got now, the biggest problem I have with what the Fed is doing, I mean, think about the real economy right now. It is booming. I mean, we've got the lowest unemployment rate in 50 years. We have 7 million more workers than we have people to fill them. We get great Christmas sales this year for retailers. We have wage increases finally for American workers. And by the way, that's something that we want. We want higher wages. It seems like the Fed wants lower wages. My point is, show me the problem here that the Fed is trying to fix.
That's the thing. And here's what my view is more nuanced than what you're saying. What I'm saying, if China is the linchpin of global growth and we hurt China, then I can see what you're saying. But I'm saying domestically, I don't think China hurts us internally. With the, if we get into a trade war and the tariffs and the supply chain, et cetera, that's where I think that we're going to be just fine.
Joe, can I just make one quick point about that?
If China does slow, that could be bad for global growth, but that's tough because we're trying to accomplish something.
But here, look, I'm a free trade guy, and I have disagreed with Donald Trump in public and private with him on this. But I do think now is the right time to pick this fight with China. But your point is a really important one, because what you just said is exactly what Donald Trump believes. This is a guy who believes in leverage when you're in negotiations. And he believes his number one point of leverage, and you guys, I'd like your guys' thoughts about this. He believes his leverage here is that China needs the United States more than we need them. And actually, that, in my opinion, then happens to be true. Now, that's also a kind of mutually assured destruction kind of scenario where, well, we're going to hurt you more than we're going to hurt ourselves and so on. But that's his leverage point, and that's where he thinks. I talked to him a couple weeks ago. He's pretty confident he's going to get a deal with China.
But a couple weeks ago, Stephen, you said you spoke to him a couple weeks ago. I'll note, I was on this program a couple weeks ago, and the Dow was 4,000 points higher in the month of December. The leverage was tilted a lot more towards the president at that point.
That's true.
And so at this moment, I think there's a much greater level of agita and more of a willingness for the U.S. to blink. So it'll be interesting to watch it play out.
Steve, well, I think that's a good point, because here's you're right, that the fact that our economy has faltered a bit, especially, the stock market has weakened his position in this trade deal, because it means we both need something done, and the Chinese can be belligerent and say, no, we're just going to hold off. We're going to wait you out, Donald Trump, and that's the danger of this scenario.
Stephen, I think the thing with the Fed is, and you made some points, so the way Volcker managed things. Volcker wasn't using dot plot charts and models. He was looking at markets, and there's always a lot of criticism. Oh, the inverted yield curve has predicted 9 out of the last 3, and so they don't want to use an inverted yield curve. But the Fed has predicted 0 out of the last 9 recessions. The worst predictor in history are these bureaucrats and academics that think that they can figure out what's happening. And if I looked at oil, and if I looked at copper, and if I looked at a 4,000 point drop in equity markets, I might think maybe our dot plot charts, or maybe we ought to wait and see what happens before we say we're going to do it 3 times, 2 times, 4 times, autopilot, all the things they're saying. Well, I think that's Kramer's point.
Look, Joe, you've got it exactly right here.
I know.
Why is it that
I just need you around more?
No, this is you've got it spot on. There's a view on Wall Street that somehow these people in Washington at the Fed are some oracles from God.
I know.
And they've screwed up so many times. I mean, what kind of idiot? I have to say, this was one of the most idiotic rate hikes ever. I mean, we've got deflation, and as you said, what is oil price down now? 40? Did you say 40%?
Yeah. Well, it's supply.
I mean, not just
supply.
Okay. Well, but
supply. Really?
The price is down, but not just oil. Look at what's happening to the price of silver. Ask farmers if they think the prices are too high. I mean, soybeans, wheat, cotton, copper, everything is falling in price, and I just don't see the rationale. Except for the fact that there was kind of arrogance, actually, Joe, in what the Fed did the other week. Like, we don't care what's going to happen with the economy and the stock market. We're going to do what we're going to do.
I'll take the other side of that. It was signaled to the market. It was priced in by the market. And for 10 years, we've held down rates artificially low. And it's fallen to Jay Powell to do whatever he can to try to get rates
back to a reasonable
level.
Do we think there should be this meeting?
The rate increase last week was the right decision. There's a difference between good decisions and good outcomes.